I'm here in Chicago with John Rogers. He is the co-founder, co-CEO of Ariel Investments. John, pleased to have you here.
Great to be here.
Your firm started, 41 years ago, has always sort of had this ethos of patience, of stock selection, of value. Where do you find that in this environment?
Well, as you know, our logo is a turtle, so we really are patient investors. And we're finding our values in a couple of different places. One of our favorite areas is the healthcare area. We have a company, Invista, that's a great dental manufacturer and helps people, make sure they keep their teeth healthy. It's an extraordinary brand, a real moat around it. Other favorite healthcare companies, Adtalem. They are the largest provider for-profit education schools for nurses, doctors, and veterinarians. Really, it's, as you know, there's a shortage of nurses, a shortage of doctors, shortage of vets. Adtalem is extremely well positioned to do really well, less than 10 times earnings. Great CEO, Stephen Beard. So healthcare has been an area for us. Another area is just the sports-related, entertainment-related companies.
Well, let's talk about sports, because when you look at the ethos of this company, the idea of patience, I think nowhere was that more representative, at least in recent years, than your investment in Manchester United, the soccer club. You still have a pretty sizable stake in that, though I know it's down from what it was, but there are a lot of people who questioned that investment at the time. What gave you the confidence to stick by that?
Well, we think professional sports is a great place to be, and Manchester United has one of the best brands in the world. And more with the technology, and you'll be able to watch games on your phone at a moment's notice, whatever's happening around the world. We think Manchester United is especially well positioned because of its strong brand. It's hard to replicate that. It would just take forever to be able to do that. Now, the stock has not performed well. They put themselves up for sale.
Right.
They had a partial sale, and so stock was sold at 33.
Yeah.
We were able to sell a significant amount of our stock at higher prices.
Okay.
Now it's drifted lower because people presume that there won't be another sale for quite a while.
Right. Do you think there will be a sale?
We don't think so right now. We think it'll take a while for everything to settle down, but we know there's real value at 33, and the stock at under $15 here recently. You're buying the stock at a 50% discount to what we think the private market value, and we know that the company's worth $33. So we think if you're patient, to your point, you can buy it today at less than 15, and 5, 6, 10 years from now, be able to get full value for it going into the future.
You mentioned other stocks in the sports and entertainment area. You've also been involved with Madison Square Garden, and I guess partly through the spinoff, you ended up as an investor in Sphere.
Yes.
Yeah.
I mean, we love all three parts of the Dolan empire. There is a Dolan discount, which we think is overdone. We think that's given an opportunity to invest
in who he is, or at least the perception of who he is.
The perception.
Yeah.
Because he's done extraordinary things. Madison Square Garden is the world's greatest arena.
Okay.
It's iconic.
You're saying that sitting here in Chicago with the United Center in the background, but go on.
Well, it's true, but there's no comparison to the Madison Square Garden. It is a truly special place, and right in the downtown in New York City. And they executed a refurbishment more than 10 years ago that was done very, very well. It's exceedingly profitable. They do own the Chicago Theater. They own the Rockettes show, the Christmas Spectacular at Radio City Music Hall. So Madison Square Garden Entertainment's a great business. We think 20 years from now will still be there. People watching concerts, watching games.
Right.
Madison Square Garden Sports, where you can actually own the teams, the Knicks and the Rangers.
Sure.
Two iconic brands, both selling at less than 50% of we think the value of those businesses. So when you look at Madison Square Garden Sports, we think you're going to get, if you're willing to be patient, you'll be able to get full value over time. And then, as you mentioned, the Sphere.
What's the ballast, though, there? Because, I mean, on one hand, when you look at sports and what you would make from ticket sales, that can't be it. That's not enough of a business, is it? I mean, I know Dolan has done a good job. I mean, you mentioned, what was it, the Christmas show or something like that, where he has done a good job with intellectual property and basically seizing, or at least holding on to the rights to certain things that I would think would give currency down the road.
Well, I think in both the businesses that I mentioned, there are opportunities, there are hidden opportunities. So Madison Square Garden itself, gaming is going to be very helpful to them as more and more people gamble, and you'll be able to have a sports book inside the garden, like we're going to have here at the United Center. You also, because they love the garden, there's a lot of value there. Whenever they renovate Penn Station, we should be really beneficiaries of that because we own the rights to that airspace. When it comes to the sports teams themselves, it takes a long time sometimes, but television, that's where it's really kept them generating all the cash flow. Seats are important, sponsorships are important, naming rights are important, but what the major networks pay and now the streamers are paying for that sports content, because people want to see live sports, and it's the one thing you don't record and watch later. You watch it live.
Absolutely.
So it's so valuable.
What's the future of that, though? Because the demand is certainly there, but the mechanism for delivering that, as you know, has become a lot more fractured. I mean, what is the future of television? Last time I checked, Ariel still had an investment in Paramount, which is obviously going through a lot right now, trying to figure out what its future is going to be.
We understand there are a lot of challenges with linear television, and the traditional bundle has, of course, completely fallen apart. But we still think that Sumner Redstone was right. The content is king. So if you're Paramount Global and you own the rights to CSI and The Godfather and Mission Impossible, and you've got the NFL and the Super Bowl and the Grammys and all these extraordinary brands that are there, all the active, 60 Minutes and CBS Sunday Morning and all the different things that you can watch, we think that content will be valuable however you end up getting it, whether it's through streaming, whether it's on your phone, streamed onto your phone. You're going to be in a great position. So we think content will still win out, whether it's sports or entertainment, whatever types of content that's there. And we think Paramount Global has the best content.
Okay.
And
do they have the management to actually execute on that vision? The idea, they have the great content, but as you know, it's been an underperforming stock primarily because it is still very fractured, and who knows, maybe you end up with new management once Sherry Redstone finds a buyer. How confident are you that she can pull that off?
Well, we think that Bob Bakish has done an excellent job under enormous amount of pressure. He used to run Europe, and he's great at understanding the international values there. I think Sherry's going to do what's right for shareholders and understands that it's what's right for her family. If you're going to sell that company for its maximum value, you're just not going to sell the part that she owns, but you're going to want to sell the entire enterprise where you'll get the synergies and the benefits. And there are so many large technology companies as well as traditional media companies that would be natural to want to buy Paramount Global. And you can get it for such a, we think it's really selling at a significant undervaluation here. And there's so much negativity around it. Everyone hates it. And you remember the great John Templeton always used to say you want to buy when there's maximum pessimism. Clearly in broadcast television now there's a maximum amount of pessimism, which we think creates opportunity. As a value investor, as a contrarian investor, we love this.
Do you see a future of, I guess, traditional linear TV, or do you think all of this is going to migrate to a more streaming, sort of evergreen type of format?
I think eventually over the next couple of decades it'll get moved over to a streaming. But the nice thing, again, there's going to be all kinds of creative ways that you'll be able to access content, on your iPad, on your computer, on your phone, and there'll be ways to be able to sell advertising in all kinds of different types of ways, and to be able to just get what you need when you want it. I think ultimately it's going to, if you have the right content, it'll be monetized in a very profitable way. I think that's really important.
Do you or your folks, do you talk to the board or the management at Paramount from time to time? You have a pretty sizable stake, 4.5%, I think, as of the end of last year.
I'm not exactly sure the percentage that we own now, but we've actually been buying stock as it was making new lows the last few weeks.
I saw that.
Seeing that we think there are bargains there. We've happened to know, we've had a couple meetings with management in the last several months that have given us confidence that they are on top of their game. We've talked to board members and others and tried to make sure that they're going to be doing what's right for shareholders, and have come back convinced that they understand they have a responsibility to all shareholders, not just Sherry. And I think that's something that maybe is not well understood on the street, that people think there could be a deal that would be Sherry friendly and not be friendly for everyone else. But as I talk to my friends like Mario Gabelli and others, we have confidence that the management of the company will do the right thing for shareholders.
With the strategy, though, that you guys take at Ariel, is it more advantageous for, say, to be on that board, or with your current situation where you just have a sizable stake? I assume, given the stake, they'll take your call any day.
When we have size, we always have taken sizable stakes as small, mid-sized value specialists. We would never go on a board of a company that we own stock in at Ariel. It would really tie your hands to be able to move in and out when you need to be. But we try to act like an independent shareholder would, or independent director would, by giving management our best thinking, and not in a confrontational way, but in a collaborative and constructive way. Have you thought of this? Have you thought of that? here are things we're hearing, here are things that we think can be helpful to you. So we want to be a part of that management team's advice-giving teammates.
It's interesting to go look through the holdings at Ariel because you do get some real insight into not just the strategy and ethos, but where you maybe see the buck going. I thought it was interesting, one of your largest holdings right now is a Jones Lang LaSalle, JLL, a big commercial real estate company at a time where commercial real estate is really hurting.
It has been a very difficult time. As we know, all of our offices, so many offices now are people are going 3 or 4 times a week. It's just not like it used to be. But JLL has diversified dramatically. So they're not only just doing leasing, they're doing sales. They outsource real estate for large corporations, will take care of all their real estate needs. And they're global. So people maybe are not back in downtown America everywhere, but that's not to say that over in Europe that people aren't back, or over in Asia that people are not back. And the fact that JLL has become a global enterprise, we think it's really helped to balance out the risks and challenges that have happened here because of COVID.
So can that, for other companies out there in the commercial real estate space, can that diversification that you see at JLL, could that be the model that maybe helps some of these companies weather the storm?
Well, I think the big guys are the ones that will be able to weather the storm the best. CBRE competes with JLL. They are the 2 largest by far. Right. There are a couple of others that are, have scale. But the vast majority there are locally focused. It'll be hard for them to be able to have the kind of international benefits that a JLL or a CBRE has.
How do you feel, though, when you look at the current economic environment and this idea that given that interest rates, which may have contributed to some of the pain we're seeing in the office space, obviously the pandemic is largely to blame, but if interest rates remain high, as a lot of people think they are going to remain, is there not going to really be that lifeline for maybe some of those legacy buildings and those second-tier buildings that are facing a refinancing coming up?
Well, I think we're getting used to interest rates where they are now. They're not dramatically high on a historic basis. They just look high because they came from zero, up to where they are today. So we think where we are now is not bad, and we think companies in real estate and other business will be able to learn to make do as we get used to where rates are. But also, we think the Fed's on top of their game now. They were late to the party, but now they're doing the right things. Inflation's back under control. Interest rates will go lower. And so we think real estate will be a place where you're going to be able to benefit. People, I think, have gotten too pessimistic, too gloomy around the real estate, and often, again, because they're looking just around their own neighborhoods. But it is different. Not only is it different around the globe, it's often different. It's also different in small towns, Peoria or Rockford or whatever it is versus Chicago or New York or L.A. And we have to take that into account for these significant real estate companies.
I know that historically interest rates aren't terribly high, but obviously there's a whole generation of folks that really only knew basically 0, 1% interest rates. And this gets to a broader question, though. What do you plan for longer term right now? That we have to get comfortable with, 5% or 5.5%, wherever the Fed takes us? Or do we start to look longer term to an interest rate environment that could go back down, may not necessarily back down to 0 or 1%, but something significantly below where we are right now?
I think something significantly below where we are right now, and that gives us a lot of optimism in real estate-related companies. Some of our favorites, whether it's Leslie's Pools or Residio or ADT, companies that are supplying products, and whether you're building a new home or just expanding an older home, these buildings-related products, these home-related products, we think will do quite well.
So you're relatively confident in the job that Jay Powell is doing right now. The economic conditions, this soft landing, this Goldilocks scenario that the market at least seems to think we have. Do you think that, Jay Powell delivered that or is on his way to delivering that soft landing?
I think Jay Powell and the Fed have done an excellent job getting back on track. Once they realized that inflation wasn't transitory and they had to get serious about it, I think they're doing all the right things, and I have a lot of confidence that a year from now rates will be significantly higher. We haven't gone into a recession. We've really been able to balance everything in a very, very effective way.
And are you confident that, say, within a year from now, the U.S. will still be a better place to invest than overseas?
I'm very bullish on America. As Warren Buffett always says, we have the greatest system in the world.
All right. John, always great to talk to you. John Rogers, of course, the co-founder of Ariel Investments.